Hey everybody, so I'm gonna go ahead and get this started. And for everybody that's not here, I guess they could just watch it later. So no big deal. So I'm just gonna start looking at some technicals here, and if you guys do have any ticker requests, just put them in the chat box, and I could take a look at them. So my biggest focus today is on the VIX. So when I'm looking at the VIX, I'm paying attention to this trend line right now. So the way that we're gonna look at this trend line is we're going to zoom out. We're going to look at the 1 year time frame. From here, we're just going to zoom in a little bit. And we're going to get the bases right here and these wicks. Now, if you look right now, it looks like we're breaking. It looks like we're going to have this break right here. So you guys can clearly see this break right here. But the one thing that makes me a little bit nervous right now is we have this gap right here, as you can see. So in the past, when you see gaps on volatility, let me look for one right here. So this right here, for example, we had this massive gap down. What happens later is that they go up and they try to fill that gap again. We could go back here and we could see the same thing. We had this massive gap up and then we filled it and then we went back to retest it and fill it again. So these kind of things can happen. Keep in mind that this week is options expiration. So that happens on Friday. So a lot of crazy stuff can happen right now. But right now, as things stand, if we close the way that we close right here, then the VIX is going to break this uptrend right here. So that's something to really pay attention to. So this could easily just reverse. Now, if it wanted to reverse, it would have to get back over 16, and then it will look like a bullish bounce from this point. And then we could probably go for this gap fill. Now, I'm going to go ahead and let's look at SPY. So when I'm looking at SPY, I'm just going to go on the 5-day time frame. The one thing that I'm worried about the most, now this is what really worries me, is this gap right here. We have this massive gap from 392.55 to 395.67. So we could go ahead and fill this gap as early as today. I mean, that's the downside. We have quite a bit of downside here. I mean, that's almost 2% here. So it's like 1 to 2% drop that could happen. So that's the risk right here. And then that's going to be synonymous with that gap fill on the VIX. Let's see, where did that go? Well, we'll just type it in right here. Or UVXY actually. So I just look at UVXY because this is real-time price action. So yeah, this gap fill right here will probably be SPY filling the gap down here. So that's the one thing I worry about. Now, if we're looking at support, I would say this first area right here could act as support, 395.61. If we break under this support, then yeah, we're going down for that gap fill. And then after that, hard to say. I mean, could even go right down here to 390.65, which is this gap right here. And then after that, I start getting less bullish because we're going to zoom out. We're going to look at the 1 year. And then maybe we could draw some sort of trend here. So, if we do have some upside, what I do think could happen is we could go right here. If you look at this doji candle right there, this doji that was built out on the 6th, I think we could get right up to there, 411. So that's kind of like my upside target. And I do think things get a little risky if we do get there by the next day or two. So that's kind of my upside projection. And we could even go right here a little bit lower, which would be reflective of this February day where we had this massive rally. So, I mean, there's tons of resistance everywhere. There's just literally resistance everywhere. Not a lot of support after we go down here. And then if we do notice, this is a very clear downtrend channel. So when I really zoom out here, I mean, we're just looking at support here. There's not a whole lot of support. So if we start breaking down these key levels, and I would say if we break under 367, then there's a lot of pain to be had. And I would think that, we could go as low as this right here, 330, which was the pre-pandemic high. So that's where I'm a little bit worried on SPY. Now I do want to draw this trend line again, just to show you guys. So this was prior resistance in this move right here, but we're creating this new move. So as you can see, I could probably draw this down a little bit lower. This line definitely had a little bit of significance here because now we're getting back above this, but we're still within this. The major trend right now is this trend channel right now. So there are different trends that are starting to collide here because we did see this as well. So there are some different things playing out. I do think if we get below this convergence point, which is right around 390, if we do close underneath that, things could start getting hairy. Just because this is where all these points collide, and then that would act as support. And let's just look at some other mega cap stocks before I go into Etsy. So I'm going to take a look at Google right now. So Google is in a very, very, very clear downtrend. As you can see, there's this just resistance line. And right here, there's this fake out. Now, I'm sure a lot of people got screwed right here. And then you can see there's a gap right there, gap right here, gap right here, and then that went and got filled. So, yeah, I mean, right now, we basically rejected off this line, as you can see. And doesn't look too good right now. We could be going for this fill right here. That would be Google at around, let's see, like 2,260. We could be going down for that. And that'll definitely hurt the S&P a little bit and the NASDAQ. But also recognize that this could be a broader wedge. So if I do look over here, we have this prior resistance, which is now going to act as potential support. And you can see why this is significant. I mean, we have these touches right here. You can see these wicks. That move, it catches this move before this massive gap up. And then you can see that it's been acting as support right down here. So something to pay attention to right there. And we could take a look at Microsoft. So to me, Microsoft is in a pretty obvious trend channel. I mean, I think these moves get a little wonky right here just because this was right around earnings. But I do think that the major trend channel is right here, which we're in right now. So where I do see major resistance on Microsoft, it's probably going to be right here at this 270 level. As you can see, we had prior support here, but now it's going to act as resistance. So that's where I would be a little bit cautious. If we do get to these levels, 270 is going to be resistance. And let's see if we could draw those other trends. So sometimes you don't really want to be zooming out and drawing these trend lines. You really want to see where the bodies of these candles are and where the wicks line up, just so you can get a better idea. So you can see right down here, when we fell down here, we bounced off this support, but we rejected off this resistance. So this resistance is twofold because there's a resistance right here, and then there's a resistance from this trend channel right there. So if we do make it past this trend channel and we start going bullish, then we have another twofold resistance that could be right at this resistance, which was prior support at 270, with this prior resistance line that could act as another reject area. So definitely do be cautious of that. Let's take a look at this line right here. So yeah, this could act as support in the future, this bottom trend line. So the bounce off this one just created a pretty massive bear rally. So maybe we could see a rally here, but this is where I get cautious. 270 on Microsoft, as I said, for the reasons mentioned below. And one last thing, I just want to look at IWM before I go into individual tickers. Now with IWM, I want to zoom out. I guess I'm going to have to zoom out further. And one thing I want to mention is that we almost did a full gap fill, but not quite. I mean, look, we're literally a few dollars away from a full gap fill. So this is still a little bit concerning to me. I mean, why didn't they just take it all the way down here? And why didn't we just get a gap up? I happen to think that, we could be coming back and trying to fully close this gap, because right now there's still a few dollars left over. And this is the pre-pandemic high. There's also another high here back in 2018. So I do think we could revert back to this eventually. And I do think that that could potentially happen here in the next few days, in the next few months, by the end of the year. I'm not entirely too sure, but right now with the market, I'm not crazy bullish. Maybe in the short term we could see this rally happen, but even now with today's price action, I'm getting a little bit less bullish on that. But the one thing that I do want to say is that we're still in this trend channel. So if we do see a rally, I think the highest that we could possibly go is probably 196, which I think will line up with the 50-day moving average. So if we do start going up, I do think this 50-day moving average will start flattening out a little bit, and it will line up around like 195, 196. So let's just draw a line right around there. And you can see that right here that the UVXY is still breaking down. So, I mean, things still look pretty good, but I mean, we really need to see how this day closes, because, yeah, this is really going to determine everything. We want to see volatility just completely fade out. So I'm going to go over to Etsy and check it out. So we're going to go on the 1 year, zoom out a little bit, and yeah, this thing looks pretty rough. I'm just going to take out these moving averages for a bit here. So when I take out the moving averages, we could potentially be in a falling wedge, but I'd still be pretty cautious. So where do I think that Etsy could potentially fall? Oh boy, I'm gonna have to go into the 5-year time frame here. So, there's not a whole lot of support. I would say that the most support is right around here. And this was a prior area of resistance. So maybe this 73 area could act as support. But you're also going to want to look at the valuation on Etsy. What's the PE on that and things of that nature. So I am making a playlist on just quick valuations. So if you guys do have some time, do check that out. I forget what it's called. I think it's called initial. It's like initial business, like business screening or whatever, something of that nature. But it's a new playlist. I am making new videos on that, so do check that out. And you could check out the valuation of Etsy that way. And let me just throw on the moving averages. See what we're on the weekly. So yeah, on the weekly, we're below all the moving averages, even on the weekly time frame. And you can see that we tried reattempting the 200-day moving average on the weekly, but rejected pretty hard. So the one thing I will say is that if we do break above this resistance trend line, you could see another rally, maybe towards the 200-day moving average on the weekly, which is 116. And let's go back to the 1 year time frame, start looking at the moving averages here. We do have the 50-day up here at around 118. So right now we're being held back by this 20-day moving average, as you can see, rejected pretty hard right here. So if we could get above this 20-day moving average, above this resistance trend line, I do think that there is a good chance that we could see this move to the 50-day moving average. So something to look out for there. And that's it for Etsy. If you guys have any other ticker requests, let me know. And then if not, then I'll just go ahead and end this stream right here. So I'll just give you guys a few seconds here to put any ticker requests if you have them. Oh, so I do see a question here about gaps. What causes the gaps in the first place? So what causes the gaps is just basically from the prior close. So let's say that SPY closed at 400 the day before, and then today it opened at 395 or something. Well, now you have a gap. So that's essentially what a gap is. It's from one close to one open, or one open to or I guess close to open, yeah. That's essentially what a gap is. So a lot of stuff that happens in the pre-market is kind of what determines if these gaps occur or not. And then generally, if we don't go back to fill that gap right away, we could eventually go back in the future to go ahead and fill that gap. Yeah, let's go ahead and look at Tesla, and I'll look at AMT right after that. So let's see. With Tesla, the first thing I'm going to do is I'm going to zoom out. I'm going to look at this time frame right here. I'm going to draw this support line right here. And I'm going to get rid of these moving averages. So one clear thing to notice is when we zoom in here, there's a clear break in trend. So this trend line has held up for quite a long time, and we recently broke down this trend line. So I think that's very bearish. And I happen to think that Tesla could fall quite a bit more. So where I do want to draw supports is probably right here. Yeah, I would say right around here. Let's zoom in. So yeah, right there at around 537 is where I draw some support. And then let's see if we could find another good support here. I would say there's another good support right here at around 654. And then let's start drawing out what this trend is happening right now. So the reason why I'm drawing this trend line is because I'm getting in between this gap right here and this massive move right down here. So if we do start fading, let's just say we just start knifing down and we just start falling, falling, falling. Well then I do think we could get caught right around here, which would be this trend line and this support line. Now I know that seems awfully scary, that kind of drop, but I mean we've seen something like that before on Tesla. This move right here from 900 all the way to 500. So since then, Tesla has definitely reported some better earnings. So I do think if it does fall down to that area, it has a lot more, a lot more people might go and pick it up. So we also have this prior resistance, which is now acting as a support line. And right now we have this resistance is probably the prior resistance or the main resistance that's going on right now. And as you can see, we're in a downtrend channel. So it's pretty clear here. It's essentially following the SPY. So let's go ahead and introduce moving averages here. Go back on the 1 year time frame. So we're below pretty much all the moving averages. So now let's go on the weekly time frame. Now on the weekly time frame, you can see that we almost fell below the 100-day weekly moving average. So you can see we drew this huge wick above it. So if we do close below that, I do think price action starts getting a lot more bearish. And we could see these supports that I was talking about, 650s, 537s will probably be like capitulation on the entire stock market. So that's it for Tesla. Now I'm going to go ahead and look at AMC. Oof, that's all I have to say. So let's see if I can find some sort of trend here. So yeah, I would say this is definitely what I'm seeing here. We see this prior wick right here, these little areas of support, and then this little bottom right here. So I do think we could be going down in this trend, but AMC has a lot of volatility, so we're seeing all these zigzags. But I think mostly these are the two prior trend lines that you should focus on. And then if we are looking for support, I would say, maybe right around here. I would say $9.63 could act as support, which we saw. So you can see that we had this little move right here before we saw this massive gap up. So let me zoom in on that. That was right around $9.80. And then where we were right here was also around $9.60 is kind of where we fell to, or 9.7. So around this area. And then you can see that it was prior support right here and right here. Now I do think that just based on a valuation metric, it could potentially fall more. I would definitely be cautious on AMC. Let me see if there's anything else I can see. Oh yeah, I see. So if you look at this old resistance line, we have resistance right here. And then when we broke under it, that's when we really started falling. Resistance right here again. You can see it catches the body of this candle. It also catches the bottom of this massive rally. So this can also act as potential support here in the future. But price action is getting kind of tight. So maybe within the next few months here, you might really see AMC just absolutely break down again, or it might just have this crazy rally. So do recognize that price action is getting kind of tight here. Anything else just before I go? Well, let me just look at SPY one more time, see where that's going. Oh, 401. Nice. I was expecting it to be like below 400. So let's just look at today. Today is just keep in mind that this week is OPEX, so options expiration. So this is where the pros come out to play, you know. They're literally burning premium so efficiently. I mean, just look right here. Now, if you saw this morning's fade, you might have said, uh-oh, we're going for this gap fill, and you might have gotten puts right here. Now look how badly you got screwed right here. And then you said, okay, well now we're getting calls. And then you could have just flipped the calls and then, oh shoot. And then, you know, right here you say, uh-oh, we're going to go down again. And then you get puts. But nope, calls again. And then you could have said, oh, well, now I'm going to get puts here. And then you would have been right to assume puts. But then maybe you would have decided to hold on a little bit longer here. And then you see this crazy rally. So they're very efficient today. I mean, just look at this chop. They call this chop when you see just crazy up and down fluctuations. So just take a look at this right here. If we do break above this area right here, 401, what is that? 401.76. You know, we're gonna have to test this area right here for a potential double top. And then if we can really break past that, I mean, the area that I'm really looking for to feel a little bit better is if we break this right here, 406. If we break this 406, what is it? Yeah, if we break 406 and we get above this area right here, so there is this tiny little gap right here. If we do get above this 407 area, I would feel much better. And you know, I think we could retest that that area that I was talking about, this doji right here, that 411.44. So that's basically it for today. Let me double check the chat real quick. Okay, so I'm seeing SoFi. Let's take a look at SoFi. So the one very clear thing about SoFi is when you look at SoFi, there's this 50-day moving average. Now, this 50-day moving average is working against us. And I want to show you guys, if you don't know how to put this on your chart real quick, I do have a video. It's under the technical analysis video. So do check that out. But real quick here, you go on indicators, look at edit indicators, you go on moving averages, and then for the length, you put in 50. For the style, you put in whatever color you want. And then when people are talking about moving averages, they're generally looking at this 1 year time frame. So that's how you do that. And you get this green line right here. Now notice that every single time we went up to this right here, hard reject. Hard reject. This time investors got a little bit smart and they're like, nope, we're selling before we see this. And then now we're coming back up to this. So the major resistance here is going to be $7.90. So write that down or put this, get this green line on your chart, definitely. Because that's essentially what's going to happen, or what could happen, is that we just go right up to here, we reject, and then we follow this downtrend. So if we're looking at what this trend actually is, it's basically a downtrend channel. Now I know that SoFi has a lot to do with student loans. So, you know, if we do see something with that moratorium happen, then, you know, that could be something bullish. But just keep in mind that this doesn't look bullish until we significantly get above this. Like, I want to see some serious volume come in when this break above the 50-day moving average happens. I want to see a higher high So I want to see us break this right here, get above this. So that's 1021. So I want to see a break above this 50-day moving average, and I want to see us get back above this area to build out a higher high. So as of now, if we just go above this 50-day moving average and we just go slightly up and we just reject right here at $9, then well, that's another lower low. So keep in mind, this doesn't look bullish until, or it doesn't even remotely look bullish until we get above this 50-day moving average, we have some better news on the company, and we get above this prior high right here at around $10. And let me double check the chat again. Let's see. Oh, I can't do Enron. ENVX. What's that? Let's take a look at it. Innovix. I'm not really familiar with this, but can't really tell you too much about the actual company, but I guess I could look at the technicals for you. Oh boy, so this looks pretty bad. Not gonna lie. So yeah, this area right here is going to act as serious resistance in the future. So this is right around $12. It's like $12.09. So this is going to be some serious resistance in the future. And one thing I do notice is that there is this new trend building out. So as you can see, it's a downtrend, and we're very, very sharply rejecting. So you can see that this 20-day moving average is going to act as resistance, and it kind of lines up with this trend line. So if we do see, let's say we see $9.51 here in the next day or two, well then that could act as resistance. So I would not be bullish on this until we could get back above 1217, and we could get above this trend channel right here. So above this line right here and above this line right here would start looking a little bit more bullish again, and maybe we could see a reversal. But as of now, I mean, this looks very bearish. It's below all moving averages, and let's see if I could see something else here. Nah, thought I saw something. So that's it for NVX. I wish I could say better things, but I mean, right now it just looks very bearish. Yeah, I could do Apple real quick. So let's see, Apple is essentially it's doing what all the major mega cap stocks are doing, and they all have this similar trend here. So I could go ahead and show you what that trend is. So yeah, we have this prior resistance, we have this prior support, and this support actually caught every single bear rally here, as you can see. And then right now we have this resistance that's working itself out. So Apple is pretty oversold, and I could throw on the Bollinger Bands too to show you that. So if you're looking at the Bollinger Bands here, the Bollinger Band follows the 20-day moving average. And what the Bollinger Band does is that the Bollinger Band is essentially saying that from here, we're 2 standard deviations from the bottom and from the top. So as you can see, this sell-off right here, this was definitely a buy. That was a buy right there, because we seriously fell below the Bollinger Bands. So right now we're right back within the Bollinger Band, and we're looking to potentially hit this resistance right here. So as you can see, this old resistance line is now acting as resistance right here. So we need to get back above this, and then if we do see where resistance could show up, I would say definitely right around here, this 149 area. And Apple just has a lot of work to do. I mean, look how much it fell in the last few days. Now, I will say that the tenor of news is getting a little bit better in China with all the restrictions. Now, I know that they had retail numbers today. They didn't look too good, but they were pretty optimistic for May, just because May 20th is when they're trying to wrap up the COVID lockdowns. But you have to take that with a grain of salt, because if they do have cases that show up, then it's just going to go right back to what it was before. So with Apple right now, just take a look at some of the major moving averages we need to pay attention to. So the big one is the 200-day moving average. As long as we're below this, it doesn't look good, and that's 159.26. Now, since we're below all the moving averages, I want to start looking at the weekly. If we're looking at the weekly, you can see that we almost did one entire move from the 100-day weekly to the 50-day weekly. So now we're just kind of like wavering in between this. So the one thing that I would pay attention to is if we do get below this 137, I think things really start breaking down, and that's when the entire market can just fold over if Apple starts breaking under this 137 area. So this is also lining up with the 100-day moving average. And you can see that this was also a prior support right here. And it was also prior resistance right here. And basically prior resistance right here too. So once we break under this 100-day moving average, or I want to say if we break under this 100-day moving average on the weekly time frame, and we close the week, keyword, we close the week under this, then I think things get very, very bearish. But right now we're just kind of wavering in between here. So we have a little bit of buffer from that. So I don't think this market's going to roll over right away until we see this breakdown. Let me check the chat here again. Airbnb is what I'm seeing next. I forget what the ticker is for that. ABNB maybe? Ah, yeah. So Airbnb just doesn't look too good. So one key thing that I want to note right here is this right here. So this was support, as you can see. We clearly broke under that, just a very sharp decline under that. So where Airbnb goes from here, this is where things get really, really tricky. Yeah, I mean, sometimes when a stock is so new, it's kind of hard to find any kind of trends. So I think from here, it's just all valuation, and that's what they're going to be focusing on. Now, the technicals just look horrible. I mean, we're going to have to get above 131.94 to even remotely start looking bullish again. Right now, it's just very, very bearish, and we could actually just be drawing out a bear flag here. So who knows what's going to happen here, but it's very clear that it was overbought. When you see cycles like this, when a company does an IPO or a SPAC or whatever, you'll see these massive rallies and then these massive sell-offs and then these massive rallies, but you have to pay attention that all of these rallies are lower, so they're lower highs. So this was the high, This was a lower high. That's a lower high, lower high, and then complete fade and crash. So where we go from here is entirely going to be based off of valuations. And I think technicals stop mattering here on this company just because there's not a whole lot of technicals to go off of. And the one key thing to notice is that after this earnings, we basically had this insane knife down. And just pay attention to the volume here. There is quite a bit of volume. So one thing to note, I mean, that's just going to be resistance. And let me just check the chat again, see if there's anything else. So what do I think are good buys right now? Well, right now I'm not too crazy on anything, but I do think the indices are definitely a good buy. So the one things that I will say that I think we should definitely avoid is I think we should definitely avoid REITs. Because if you think about it, REITs were very attractive when interest rates were very, very low because you would get high return. But now that interest rates are starting to rise again, I think REITs are going to follow a lot. So once you start seeing better yields on REITs, I think that's something definitely to pay attention to. You want to pay attention to those dividend yields. And when you see something nice like 7 or 10% on a good company, on a good REIT, that's when you want to get in. So I'm definitely looking for REITs to just seriously sell off. So the one I like is the king of REITs. Now I'm out of this right now, full disclosure. So I want this thing to just absolutely tank, and I want to get in like in the 50s. So to me, that would be a pretty decent return. So this one actually pays out monthly too. So I want to see this one in like the 50s. So yeah, maybe like 57 is where I would start nibbling on this one. And then I would think that maybe it could fall as low as the 40s. Or maybe not even that low. Maybe that's a little bit exaggerated. That would have to be like serious crash. Maybe like the low 50s. And I also like VYM. It's another good dividend one. But right now it's still kind of expensive. I would want to see this thing go down to like 90 or something to maybe start getting in. And SPY is pretty good too. I mean, you're getting like 15% from the top here on SPY. But if you want to get a little bit more, then yeah, you could go for 20. So I think 20 is like 375. Like 375 is where it would be a crash. So I definitely do think start nibbling in on the indices because a lot of these companies right now, um, like Apple and Microsoft, I think they're still a little bit pricey. I mean, we're looking at Apple here, and Apple PE is it's a little bit high right now. It's a little over 20, but 20 PE for Apple would be about 123. So I do think Apple could fall down to that 120 area. So, maybe that's where I would want to start getting into Apple around that mid 120s if we do get there. And then just start nibbling down if we do start falling a little bit more. So right now I'm not too crazy about anything. Um, I do like the outlook on AMD, but I do think it's a little bit expensive right now. I would want this thing to kind of break down and revert back to this area. So like right around 70. So yeah, I'm kind of hoping for AMD to just break down and get into this attractive area. So I want it to fall underneath this support line and then go back to 70s, maybe even these low 50s or high 50s, that would be nice. So if I do see AMD around the high 50s, I think that's definitely a buy. Maybe like the 70s would be like a nibble. Right now, I would just avoid it. I do think it has more downside. So maybe even a buy off this trend line might be okay. And AMD, I would just maybe start buying a little bit here, but definitely save some money for these low 70s, potentially 50s. I don't think that could happen, but I think the likelihood of that happening is a lot less likely. But I do think AMD has a lot of future potential. And let's look at this. So I do think Disney is a bit expensive here. I would like Disney around 75, and I know it sounds crazy, but if the market does turn over, I think that could happen. Very likely. See if I could find some sort of trend here. So the key trend here is that we broke this trend, so now we're fading. So now we don't really have any good trend lines. So maybe I have to go to the max time frame. So yeah, in these 70s, I would probably start wanting to accumulate. Just because if you look at Disney's net income, it's fallen down significantly since before the pandemic. It's only about a third of what it used to be. So, in my opinion, it's a little bit expensive. I know that they have Disney Plus and all of that, but in my opinion, it's still a little bit expensive. And I do think that they could recover a lot of that income. So, I think it has a lot of good future potential. And right now, it's just getting hammered. So if we do see Disney in the 70s, I do want to be a buyer. And I do think that if you're looking at the future cash flows, then yeah, the valuation does look good around there. Let's see, is there anything else we want to do before I go? I have plenty of time today. All right, if that's it, then yeah, I guess this will be the end of the stream. I hope this was helpful for you guys, and maybe in the future I could start doing a little bit more of these. But definitely check out my new playlist. Because I will be adding more content to that. And probably after today, I'll have a market overview again as usual. Definitely, I'll try to do these market overviews a little bit more in this week because this is options expiration week, and I do think we could see some crazy stuff this week. I do happen to be a little bit more bearish this week than any other week, just because I saw some unfavorable stuff in the options market, so I am a little bit worried on that side. So have a great day, you guys, and hope this was helpful.